Okay, welcome back. This is our part 2 of Section 8, Unit 4 in Accounting. So in the previous video, we just got done talking about closing entries. So how we're going to close out now these temporary accounts, and we close them to income summary, and then transfer that to our owner's capital account. Okay, so this is, again, an example. Say we have our sales revenue account, and it has a balance of $1,000. We have our rent expense, a balance of $100, and other expenses, a balance of $400, okay? And then we also have withdrawals with a balance of $150. So remember, we're not dealing with withdrawals right now. Withdrawals goes directly to owner's capital, and so we need to close out our revenue and expense accounts first with the income summary. All right, so in order to do this, let's look at our revenue account first. So we have a credit balance of $1,000 in our sales revenue. We need this to be 0. So now we're going to have to debit our sales revenue account for $1,000. And by debiting this account, let me just kind of bold it so you can see it, that's going to leave us with 0. We had positive 100, we took our positive 1,000, then we took away 1,000, so now we're at 0. Okay, so we have a debit here, but knowing the debit credit rule, now we need to have a credit that is worth the same amount as our debit. And that's where income summary comes in. So we debited this sales revenue account, so we're going to credit income summary. Okay, nice and easy. So our sales revenue is down to 0 because we had a credit. So we subtracted or we debited that amount for 1,000. So now we're at 0. That account's closed. We're done with it. So since we debited revenue, we need to credit income summary. Okay, so I have my debit, have my credit, we followed those rules, we're good to go. Now let's look at my expense accounts. I have rent expense. I have a balance here of $100. So now I need to credit this account for $100 in order to leave me with a balance of 0. Okay, so same kind of thing. I had a positive balance of $100, so I'm going to credit or subtract $100 from this account, leaving me with a 0 balance. Since I credited this account, I'm going to have to debit my income summary. Okay, got my debit, got my credit, good to go, rent expense closed. Okay, and then I also have this other, or like miscellaneous expense account. And I have a $400 balance in that account, so same thing. I'm going to have to credit this account for $400, and that will leave me with a 0 balance. And since I credited this account, I'm going to have to debit my income summary for $400. Okay, so now I've got my sales revenue account, we're closed. It's closed to 0. I have expense, rent expense closed to 0, and other expenses closed to 0. Okay, and I transferred all of those balances over to income summary. Okay, all right, so next part. Now I need to find the balance of my income summary. So I have 1,000 and I'm taking away 500. So that balance is going to be 500. Okay? So again, there's no increase or decrease side, but our debits and credits always subtract from each other. So I had 1,000, then I'm taking away my debits, leaving me with a $500 balance. All right? So now we said in the previous video that I need to close this income summary account by transferring this balance over to owner's capital. So now I have this $500 credit balance in income summary. So now I'm going to have to debit income summary for $500, leaving me with a 0 balance. Okay, so and what this $500 should tell you is that we have a net income, right? So we figured out, we already did this on our income statement. So our income statement is something separate, but it's the same numbers. Our income statement looks at our revenue and our expenses. So does our income summary. So we have a net income of $500 in our income summary. If we had our balance over here on the debit side, so say this was reversed and we had $1,000 in expenses and $500 in revenue, we would have a debit of $500 balance, and that would be a net loss. But this is a credit of $500, so we have a net income. All right, so we're closing this income summary by debiting $500, and so then we're going to have to credit our owner's capital account for $500. Okay, we debited over here, debit credit rule, I need to have a credit, so I'm crediting owner's capital, and now my income summary is closed. All right, so I am done with revenue, expenses, and income summary, but I still have this withdraws account. Okay, so with withdraws, I need to close out this account, so I'm going to credit our 150, leaving me with a zero balance, and we said this withdrawal account goes directly to owner's capital. So I'm crediting this account for 150, which means I'm going to have to debit this account for 150. So then my ending balance for owner's capital is going to be my credit minus my debit, which leaves me with $350. Okay, and this should match our income statement. This should match our owner's equity statement because it's all generating the same information. Again, with accounting, we double and triple check ourselves just to make sure all of our numbers are correct and all of our information is accurate. So our owner's capital account has a credit balance of $350. We closed out all of our temporary accounts, we transferred those balances over to owner's capital, and here we are. So that's just looking at it in a T account form. Okay, what we would actually do then is we would need to journalize all of those different entries that we had. So again, just like we did on our T accounts, we list our debits first. So we ended up debiting our revenue account and crediting income summary for $1,000. Look up here, we debited sales revenue, credited income summary, and that's posted in the journal. Same with our expense accounts. We debited income summary for $500 and we credited each of these accounts to close them out as well. So you'll see that instead of listing rent expense and then income summary, miscellaneous expense, income summary, they just added those together, those expense accounts, and listed them into one journal entry. Okay, so then we close out our income summary with a debit of $500 and move that over to our owner's equity. Then we also transfer over our withdrawal balance to owner's equity, and we're done. Okay, so that's the journal. Those are the closing entries for the journal. All right, so that is it. The next step, of course, would be, we're not going to demonstrate in this video, but we would then post those to the appropriate ledgers, right? We would copy these journal entries over to the appropriate ledgers, and the next step is to create a post-closing, so after closing, trial balance, which will be done in the next video.